Hey everyone, we're live. I really hope everybody could hear me. We had a little snafu yesterday. None of my mute buttons are hit. Testing, okay. I just made sure we're okay. So if anyone out there hears me, let me know. I want to have a really good show today. I'm going to pull up my profile, see who's out there on LinkedIn and Facebook land. So first of all, the theme for today, nothing yet coming up. There could be a delay. So I just got a text from Judy to let me know if, she could see it. My wife is Judy, by the way, if you didn't know. But I do see it right here on LinkedIn. So there is a bit of a delay. You see this? I don't know if you could tell, but there's a bit of a delay, maybe a 10-second delay. Okay, so I'm out here. Theme for today, 2 up days in a row. That's like incredible. This is the first time we've had 2 up days in a row since February. We had an incredible day yesterday, the best day in the market basically ever. So no one's seen anything like what we're seeing now. So for anyone who is young and people say to you, "Oh, you've never seen this before," or well, I think at this point we have. I can't say we've seen it all, but we have seen a hell of a lot. Okay. Anyway, this is the place. You've come to the right place. This is the place for investing know-how, personal finance, business. My name is Mitch Goldberg. I'm with the wealth management firm Client First Strategy. I'm a financial advisor with 30 years of experience. Welcome to you. If you're watching this in the live, I'd love to answer your questions. So go ahead and ask in the comments, agree or disagree, whether if you're in Facebook land, LinkedIn land, whatever. I'm here. I'll be checking. If you're watching this in the replay, I'd like to welcome you also. Most people actually watch these in the replay, but it's fun in the live. But if you have any questions, ask away. I will get back to you as if you watch them in the live version. First, we're going to roll that intro. We've got a lot to cover in just 20 minutes. So I'm going to teach you a couple of things, and we're going to go over a couple of things. And I want you to really understand what the heck is going on with this whole financial market, economy, stimulus package, because you may be tempted to make a decision without the right information. We're going to get into that now. Okay, so let's just take a quick look here. We'll do a quick share screen, and we're going to pick the screen to share. This is cool. I'm actually sharing the screen that I'm on, and it's like an endless amount of things over here. So let me move my screen over here. Let me get back to the stock market. Okay. Dow jumps more than 2%, first back-to-back gain since February. That really is the theme. What you're looking at here is the pace of coronavirus outbreaks. I know it's might be a little tough to see on a little screen, but what you're seeing is, you see how China is kind of flattening, South Korea is flattened, Japan and Singapore are pretty, not too steep, but the U.S. is super steep. So is France. Even look, Iran actually looks like they're starting to flatten. Look, I don't know if you can trust all these numbers coming out of some of these countries or not. Italy is still rising. Okay, but that's what it's all about. That's obviously the overarching theme for the last month or so. I don't expect this to go away. Yesterday I said to you that we may actually be at a bottom on Monday. On Mondays, I said this yesterday about Monday's bottom. The reason is because of all the stimulus and the Federal Reserve's monetary policies. It puts such a strong backstop to the economy. So it won't stop us from going into a recession, but this will be the first time we're going through a recession where there is so much money given out, where the unemployed are not just getting money, but even more money than usual, where companies are getting bailouts. I'm not saying you should like it. Okay. I'm not saying that at all, but that helps. So If that happens, maybe things aren't going to be as bad as expected. And if that's the case, then stocks probably shouldn't have sold off as much as they did. A friend of mine, I'll just say the first name, but you can check him out in the comments in here, was the first comment I got today. No way we hit a bottom until we see a cure for this coronavirus and the hospitals or whatever are not full, et cetera. I get that, Matt. I really do. And from everything we see, things are going to get a lot worse. I know in New York over the next 2 or 3 weeks. It's a pretty scary thought. We haven't seen any evidence that we're bending the curve. Not in New York, not anywhere in the United States. So maybe we hit new lows. Maybe we bounce around here. Maybe we're in a big trading range. Time will tell. If I'm wrong, I'll be the first person to say, well, we hit a new bottom. But I'm still doing the same thing. I'm still maintaining clients' risk tolerance levels. I'm still, as I said, since the Monday of last week, that I'm a buyer, just a little increments. And it's what I think is super high quality and what fits into client portfolios. Not just saying, hey, let's just jump on stock XYZ because it's down a lot and some good news, that stock will rip higher and we'll sell it and make a couple of bucks. That's not what I'm doing. I haven't sold a single thing that I bought. Okay, in the last week, not one thing did I do. I'm not doing that. I'm not playing that game. I'm not a trader. I'm an investor. I think now is a good opportunity for a lot of stocks to invest. There's a couple of other things to take a look at. The stimulus bill, which, even though the Dow is up 2%, it was up over 4% before, okay? And we were really looking like we were going to have another huge day, but Uncle Bernie, it's not just Uncle Bernie, it's a couple of GOP senators also that have a problem with the stimulus bill, in particular the $500 billion slush fund. That's what they call it for Secretary of the Treasury, Steve Mnuchin. So we have a few more things to hash out. I think we'll get to the finish line because everyone wants to get to the finish line. But this is really some people's last chance to make a big stink, get some extra stuff in there. Okay, I'm not happy about any delay, and I don't think we could really afford a delay. So if we don't have something, we're up almost 500 points today. If something doesn't happen by tomorrow, I could see today's rally being given back pretty quickly. Just the way it is, we need the stimulus to build our base case that we survive now, so we can thrive later. In this stimulus bill is the I'm going to stop sharing my screen for a second. Okay. In this stimulus bill is a moratorium for companies who accept financial help. No buybacks or dividends until all the money is paid back for a year. So if it takes you 4 years to pay all the money back, you can't initiate a dividend, pay a dividend, or initiate a buyback. Or any kind of, not just initiate, but any kind of buyback for 5 years in that example. Is it tough enough? Is it too tough? It's really hard to say. But I thought was interesting is that the airline industry is seeking $50 billion in government aid, and yet they paid $39 billion for buybacks. I mean, the airline industry is notorious for being cyclical, big ups and big downs. And it's not just those companies. IBM spent a massive amount on buybacks, but then again, IBM is not asking for financial aid. GE spent a lot of money on buybacks. Then again, they're not asking for financial aid. But the point is, as shareholders, we should be, I think, kind of outraged over these buybacks because, GE's under $10 a share. IBM is less than half of what it used to be. As a shareholder, I want shareholder gains, but I want the gains to last, to be sustainable. What good is a buyback if it doesn't help the price of the stock? Now, I know recessions, bear markets happen, but the amount of money the trillions of dollars that's been spent on buybacks, it was good for a while after the Great Recession, but stocks, I think, probably would have done okay without them. I just think the buybacks accelerated the upside. But once they go away and you run into a problem, then to me it looks like it's all for nothing. So that's my commentary on buybacks. I think management should be held accountable. If you want to spend all that money, go ahead. But when tough times hit, you're supposed to save for a rainy day, just like regular people. Okay. So got a couple of other things to cover here. I really hope we did hit the bottom. I don't like to go on hope though. So we'll just have to wait and see. I'm very patient. I can wait because if we didn't hit the bottom yet this past Monday, today's Wednesday, then just to remind all you people working from home, by the way, today is March 25th, Wednesday, if you lost track of time. Okay. I know some people think it's Tuesday. Some people think it's Thursday. You have to keep track. You have to, look at your schedule, maintain your routine to get through these stay at home, work from home days. Okay. So the big buyback ETF, okay, SPYB, all right, is down 33% year to date. And the S&P is off about 23% year to date. So stocks that pay buybacks, that use buybacks, are not really helping you create alpha, to create outperformance or any value really compared to the S&P 500. Just so I have to say, the S&P 500 is an index. You cannot invest directly into an index, but you can invest in a security that tracks or mimics an index. Okay, so selling everything is not a strategy. This is why I think I mentioned to everybody the other day, but sometimes people think, oh, I'll just sell everything and get back in when stocks are lower. Like you know what the bottom is. I just said I'm calling a bottom, but I'm saying I could be wrong. But for my reasons, I'm thinking it's a bottom. But you know that when you're going to get out and you're going to know when to get back in. So I just sold everything and I'll get back in at a later date. It doesn't happen. You just procrastinate because when the market goes lower, you tend to wait. Well, now it's going lower. I'll wait. And then the market goes up and then you say to yourself, I could have bought everything lower, so I'll wait till it goes back down again. And it goes down again and you hesitate. It goes back up and you procrastinate and you wind up never getting in. It's not really a helpful strategy. I'm not saying if you want to play with some of your money and you have the risk tolerance to try market timing or investing in individual securities with some of your money, that's fine, as long as you have the risk tolerance. But most people, from what I have found, are really not very good at getting out of everything and then getting back into everything sometime after, because now you have to be right twice. It's hard enough to be right once. This is why I don't like all or nothing strategies, all in or all out. And this is why, I always pound the table to say, make sure that whatever you invest in, that it has a proper, useful fit with the rest of your investment portfolio. Make portfolio decisions, not a stock to stock decision. Okay, that's my point. Okay, so the right stocks today is what has led us higher. It's very important because we had a big 2-day rally and you saw the corona stocks, the coronavirus stocks, I call them, like Walmart, Costco, I have my list here, Clorox, all right, Target, Gilead, Hormel. Not knocking these companies. I'm not making buy or sell recommendations. I'm just saying that these are considered the coronavirus stocks, and they've been going down while the rest of the market, the non-coronavirus stocks have recovered. In particular, cyclical type stocks. That's you want a market to go up on those kinds of stocks because that means recession fears, they're not going away. But worst case scenarios are starting to be factored out a little bit, and things that could go right are starting to be factored in a little bit. Just, Clorox last week, it was $214 a share, $214, and now it's $165. So that's lost about a quarter of its value in just a week. And this is the problem with chasing, the hot stock. That's why I always say, don't just buy a stock for like what could have happened. You may have done with Clorox because it's the hot stock and, it's coronavirus. Everybody's buying it and everyone wants to get Clorox wipes and you can't even get them. They're sold out. It it's really not a strategy that I find particularly useful. Target withdrew their earnings forecast. They said yes, they're selling a lot of stuff, but the expenses of hiring more people, paying those people more money, which is a good thing that they're paying them more money, and then the expense of cleaning all the stores, that is such a big expense compared to what they're bringing in revenue that it might not even help them. They might not actually do as well as they'd hoped. So they withdrew any earnings forecasts. So what's worked? The Boeings of the world, Honeywell, Eaton Corporation, cyclical stocks have worked. Okay. If you take a look at what worked today, the best performing sector, there are 11 sectors, general industry classification standards of the U.S. economy. Industrials were the top performer, and consumer staples was the bottom performer. But up until through this past Monday, it was the other way around. Staples were outperforming, industrials were lagging. So people are going into the industrials. Is this just a quick bounce? Kind of consumer staples are bouncing off a trend line up, and industrials are bouncing off a trend line down. Maybe we'll see if it sticks. Again, I do think that with all the stimulus and everything the Fed is doing, that's going to mitigate a worst case scenario for the market. And if you're looking past what's going on right now with the coronavirus, with the rise in coronavirus cases and the terrible human tragedy, I'm not trying to make light of it, but this is about investing first. Okay. I'm really trying very hard to choose my words carefully. Okay. I don't want to come off insensitive. I'm focusing on stocks and personal finance. But if you think we'll get past this in 8 months, 9 months, 6 months, a year, then you have to believe that all of this stimulus can really add up to one heck of a charged market. Marco, I think, is Jovanovic, the top quant from JP Morgan, thinks that we could see new record highs by early next year. And there have been a few other top people who are noted for making exceptionally good calls have said similar things as well. So sometimes you have to focus on the good and not just the worst case scenario. So 2 more things, and I'm going to let you go. I got a question before from a friend. I'm not going to say the name. If you have an asset allocation, let's say it's 40% stocks and 60% fixed income, bonds, cash, that sort of thing, stable. And, to me, there's a reason why you have what I would call a moderately conservative asset allocation model. And that's supposed to be based on your risk tolerance, your time horizon, your goals. So now that the market could go up, and at one point today, the Dow was up over 1,000 points and everyone's getting all bulled up, you might think maybe I should flip that to 60% stock, 40% bonds and cash equivalents. Because, you want to really capture more upside of the market. But is that your risk tolerance? I mean, did something about your risk tolerance change in the last 4 weeks? Are you a different person? Are your goals different? If the answer to those are no, then you should not change your asset allocation. You could rebalance. So maybe you're not 60-40, maybe you're not 40% stocks anymore. You're 30% stocks. Get that back up to 40% and your bonds from 70% back down to 60%. I could see that kind of rebalancing. Absolutely, you should rebalance that way. But to have a change of asset allocation based on the stock market movements, that doesn't really make sense to me, because that doesn't tell me it's appropriate for your personal unique metrics. So in that case, I would say no. Now, if you decided you were, smart enough or lucky enough to get more conservative before the market tanked, and now you want to up it back to the way you were in the past 6 months, a year ago, whatever. Well, that's a personal finance decision. Hey, this is what puts the personal into personal finance, right? Then that's okay. I'm going to take a quick look, see if anybody is out here with their questions. Okay, we've got a few. Why am I talking like that? Loud and clear. Doug, thank you so much. Doug, thank you. You've been such a supporter, Doug, all these years, and reading all my Friday blast emails and all that. I means a lot to me, Doug, that you're actually taking the time to watch this, Doug. Thank you very much. Doug used to be my son's scoutmaster a long time ago. Awesome, awesome human being, great guy. Scott Anderson, be blessed, be well, USA, South Africa. Thank you, my man, and same to you, my friend. And Robert Tanner. Hey, Robert, yes, we could hear you today. I'm really happy about that. And I know James is out there. Thank you, buddy. James, aren't you supposed to be on a conference call right now that I was on for the first half hour, but I had to go to do this? So I appreciate you picking my my show over the conference call that James and I both use the same broker dealer, Next Financial Group. So take a quick look out there in Facebook land. Okay. Okay. Look at that. Okay. Greg, you're the man. Okay, Matt, we addressed that. Good connection today. Thank you, Joanne. Joanne, thank you so much. It's really a pleasure to know that you've taken an interest in this stuff and you're watching. It's an honor. Like, look, when somebody gives their time to read your content and watch your content, time is valuable. It's the most valuable thing we have, and somebody does that. That's incredible. Joanne, thank you very, very much. I cannot wait to get back to Refuge and meet all our friends there sometime soon. Refuge is a fantastic restaurant and bar, really cool place where a lot of us business people in the Melville Route 110 corridor get to congregate, and a lot of good events happen there. Hey, Lori, nice to see you. Thank you so much. Stimulus package or relief package? I'll go with a relief package. That is a much better way to put it. What we could call it, a rescue package. How about that? One of the Federal Reserve branches, Jim Bullard, who heads the St. Louis Federal Reserve Branch, called this an investment in our survival. It's a pretty dire way to look at it, if you ask me. Greg, hope you're well. Thanks for the shout out the other day. You are very welcome, my friend. There's your question that you asked right there. Okay, so I hope I answered it. I didn't want to say your name, but since you're asking in the public forum, I could say it. So thank you, Greg. Greg, Greg is a friend from Long Island who's my neighbor for many years, and he's the type of guy that will, clean off your driveway when it snows. He won't even tell you. He'll just do it, and he doesn't even expect a thank you. He just does it out of the goodness of his own heart. And he spends a lot of his time in Palm Beach County, where a lot of our Long Island our parents are there in the winter. And he has offered to pick up medicine for people, pick up groceries, supplies. If you need him, give him a shout. That is so you, Greg. So thank you, and you're welcome for the shout out. John Robertson, you're very funny because you're talking real stuff. Well, John, you're a business owner. Who's real? Who's more real than you? John Robertson, owner of the Sexy Salad, which is a great, eatery, food place. They do a lot of catering. They're in the Hop Hog Industrial Park. John, you've actually catered some of my corporate events, and they've just been terrific. And what John is doing, he's created a farmer's market in the front of his store outside on the sidewalk, where people go and they pick up fresh vegetables and fruits. He's like one of the only guys in town, one of the only businesses in town. He's open doing that stuff, even selling toilet paper. He says the first roll of toilet paper is like 30 cents. The second roll of toilet paper is 90 cents. But if you want a third, I think, what'd you say? It's $90 to discourage people from hoarding all your toilet paper. You are such a good guy, and you're doing a world of service for the whole community. Thank you. People like you. We need more people like you. So let's wrap this up. I want to talk to you about something, the difference between cyclical stocks and growth stocks. So we like to categorize everything in Wall Street. We're like mad scientists, and we like to classify things. Cyclical stocks are companies that do well when the economy does well. So, airlines do well when the economy does well. When the economy's moving along, people buy cars, they buy motorcycles, they buy their high-end toys, like consumer discretionary goods. And, you see companies like smokestack companies, machinery, companies like Caterpillar, John Deere. Those kinds of stocks do well when the economy does well because their earnings are strong, because, they're selling a lot of product. Okay, obviously when the economy is better. And they do well in a strong economy. which is why they've taken such a hit the last month or so, because we're expected to go into a recession. Consumer growth stocks, though, are companies that can grow little by little no matter what. So companies that sell toilet paper and toothpaste. Think of your Procter and Gamble's, your Walmart's, your Costco's, some of the coronavirus stocks, okay? Because again, the economy is slowing. So people want to migrate into companies that should show strong earnings, or at least earnings that can hold up somewhat relative to cyclical stocks. So that's basically the battle we're going back and forth between, this rotation between into growth out of cyclical and now back. Will it last? We'll see. I think diversification is the way to go. Diversification, so you don't put all your eggs in one basket. It's a strategy that we use to mitigate risk, but in a generally down market, your portfolio will go down anyway. It might go down less. Okay. And you don't have to rely on one thing to move your account up or down. All right. So there you go. That is today's lesson of the day. I'd like to thank you for watching. If you have any questions that you think of after this, hit me up in the comments. If I missed your question while I'm doing this live stream, I will catch it in a little while. And I'm going to end the day. I'm going to go outside now and get some exercise, and then I'll get back to my computer. All right. I'll speak to you soon. Thank you.